All right, we got a quote of the day here. This is Mark Twain. Ready? The secret of getting ahead is getting started. The secret of getting ahead is getting started. There's more to the quote. I'm going to read it. The secret of getting ahead is getting started. The secret of getting started is breaking down your complex, overwhelming task into small, manageable tasks and starting on the first one. And I think that's really great. The reason it's on my mind, I just finished being a guest on a podcast, and I enjoy doing that kind of thing and sharing my experiences in real estate. And inevitably, the hosts ask some type of question along the lines of, what would you tell your younger self? Or if you had to do it over again, knowing what you know now, what would you do differently? And for me, it usually has something to do with I would get started sooner. And I started pretty soon, but I might get started in a different way sooner. And I look back and I realize the things that kept me from getting started were the unknowns, or thinking that maybe I didn't know enough to get started, or maybe I'll do that when I grow up. And, you know, the fact of the matter is, you never really get to that point where you say, okay, I feel grown up now, or okay, I think I know enough to get started. And there's always the voice in your head that will say, I don't know, I'm a little bit nervous to get started on this. And so I read this quote, secret of success is getting started, because that's the hardest part, is showing up and getting started. Usually once you get started in something, you know, it gets easier as you go, right? Even if it's going to the gym. You know, I don't want to go to the gym today, but I know if I just will change clothes, show up, and get started, that I'll have a good workout and I'll feel better. That's just one small example. As it pertains to real estate investing, it's the same thing. You know, if your pursuit is financial freedom, you've got to do something differently to get than you're doing in order to get to that goal. So you've got to get started in your pursuit of financial freedom. One way you can do that is investing in other people's deals, or as a passive investor, you can invest in a deal promoted by a general partner or a sponsor or a promoter. Those are all kind of interchangeable terms. And that's what I do. You know, we go out and find the deals and we get them under contract and we buy them, we run them, and eventually we sell them. And the idea is you make all kinds of money. It's not that simple, but that's the gist of it, right? And so how can you be a part of it? Well, you might have some money and you say, okay, here, I want to invest my money. And that's a very passive way to do it. And at least then you're not the one having to figure out all of the details, the leasing and the management and the financing and the acquisition. And then you're not the one to receive the phone call because the toilet's leaking, but you can participate and get the benefits of being an investor in real estate. Why might you not do that? Well, you might be nervous to lose your money, right? You've worked hard for it and you don't want to waste your money. You don't want to throw it away. You don't want to gamble it. And I think that's good. I don't like to gamble much either. I don't like to throw away the money that it took me hard work and effort to make. And so this is not a gamble. This business is not a gamble. This business, yes, it has variables, and yes, it has lots of things that you cannot control, like the world economy and interest rates and things like that. However, if you practice good conservative underwriting and due diligence, then you can take a lot of the risks away. And that's what we do. So, you know, ultimately, how do you get started? And it's finding a sponsor or a general partner that you trust and that you have some sort of relationship with. Say, you know what, I feel good investing my money with this person because of whatever, because I like their experience, or because I like their conservative nature, or they seem honest and sincere to me, or usually it's a combination of all these things, right? So you got to find someone like that, and then you have to do something differently. And in your case, it may be, this is my first investment, so I'm going to get to know this person, I'm going to investigate the deal, understand it, and then I'm going to take the leap and I'm going to become a passive investor. And if you do that, and if you do it with the right situation and the right person, the right team, then you are on your way to financial freedom. And That's what you've got to do. You've got to get started. So when I talk to passive investors or potential passive investors, it seems to me that the most common fear or the biggest concern that people have most commonly is, I don't want to lose my money, right? So, tell me what you can do, Ashley. Tell me how you can keep me from losing my money. Well, and the answer, and the attorneys would tell me, say, well, look, I can't protect it 100%. The risk, there is risk. And if you invest, one of the risks is that you lose all your money. But obviously we wouldn't be in business very long if that was our sales pitch. And if that's what we did for people is lost their money. So we work hard to make sure that that doesn't happen. And so far that hasn't happened. Knock on wood. But really it's the preservation of capital. And so if your worst case scenario is that you just break even. If I give you $100,000 and the worst case scenario is you give me my $100,000 back, well, that's not ideal and that's not why you're doing it. But if that's the worst case, that's a whole lot better than losing $100,000, right? So how can you see that happens? And again, it comes back to conservative underwriting and thorough due diligence. The asset that we buy is a cash flow producing asset. It's an apartment complex, and we have to buy it on today's numbers. What is it doing right now? What's its performance right this minute? And if we know that that's where we're entering it and we pay a price that's on par with that, then, our worst case is that, hey, we just kind of break even. Now, that's not why we're doing it. Well, we're doing it is for the upside. So we might look at it and say, okay, well, we know that we can add value doing this, this, and this. We can increase the cash flow. We can increase the net operating income, et cetera, et cetera. And that's the gravy that we want for ourselves and for our investors. And that's what we work hard to get. But we don't buy it based on that. We buy it based on what it's doing today. That way we know our position is secure. At least our break even is to break even and not to lose. Communication is probably the most important thing in a relationship. Think about it, your family relationships, your friends, your work relationships. When things go wrong, it's usually because there's a lack of communication, and maybe it's a misunderstanding, so you need to communicate a different way. Or maybe it's a lack of communication, and that seems to be the most common problem. The transparency and frequency of communication is key. We communicate with our investors at least once a quarter, and it's usually on a video like this, or if not in person. And a lot of times it's more on a monthly basis so that we can keep everybody up to speed on what's happening in the property that they've invested in. And, we don't always have great news to tell. Sometimes there are problems. Sometimes our occupancy dips lower than we want it. Or sometimes, there's a water leak and now we have a insurance claim and it's going to cost us a bunch of money. Stuff like this happens. And people normally expect that, hey, that's one of the risks, but I'm going to trust Ashley to handle it because I know they have experience and I know they can handle this. It would go wrong if I didn't tell anybody or if I didn't communicate that. And so we work hard to make sure we communicate with frequency and with transparency. And that usually keeps everybody comfortable in the deal. At least you know what's going on, right? If you own something, you want to know what's going on with it. Well, as a limited partner, you're an owner and you deserve to know what's going on with it. Another common question or concern that potential investors have, they want to know, how much skin do I have in the game, or the general partner team? In other words, hey, you want me to invest $250,000? Well, how much are you investing? And that's important. Skin in the game is important because you want the general partner to be in there with you. And that's a question you need to ask. I think that it's okay in certain situations that the general partner doesn't have skin in the game in that way, because they usually have skin in the game in other ways also. But for the most part, we always have cash in the deal with our investors. And a lot of times most of the time we're borrowing money in addition to raising limited partner capital. And most of the time the lender also requires the general partner or the sponsor to have their own cash invested in the deal, skin in the game. And it's for the same reason that the limited partner wants to know that the general partner has cash in the deal. It's harder to walk away. It's harder to ignore. These are all the thoughts. That's why everyone to have skin in the game, so we're all in the same boat together. So why multifamily? And COVID was a fabulous example of this, if I can paint this picture. So, when the world was turned upside down and nobody knew what was going on, people couldn't go to work, they couldn't leave their houses, they certainly couldn't go to the office or go shopping or go to concerts and all these things, right? And so what happened was a lot of the cash flow producing investments didn't go so well. So if you had money invested into office or retail, those took a big hit during COVID because people couldn't get out, they couldn't go to the store, they couldn't go to the office. But the one thing that they really, really made sure that they took care of was their house and their shelter. You will do a lot of things to make sure you have a roof over your head. And so during COVID, on the properties that we own, I think we may have had literally one delinquency / eviction as a result of somebody not paying their rent during COVID. Other than that, everybody paid. And they made sure that they had a place to call home. And so for a multifamily investor, that was pretty important. And that kind of drove home that, hey, you're in the right asset class here. You're investing in something that's important to people. It's not just a luxury item. It's not just, maybe I'll go to the office, maybe I won't. They needed a place to sleep. They needed a place to eat. They needed a place to raise their kids. They needed a place to feel safe, and that was home. And we are in the business of providing people places to call home. It's rarely just about the money. It's not just as simple as everything's about the money, right? There's much more to it. It's definitely not just about the money. We invest in real estate in the pursuit of financial freedom, and that money goal, that financial goal, is a very big part of it, or we wouldn't do this, right? But in order to be successful in this business, it's got to be about more than just the money. And we take our role as landlords, as providers of housing, very seriously. I see it as our job is to provide a safe, clean, attractive place to live that's well cared for, that's repaired and maintained, and that people have a feeling of pride of ownership, if you will. Happy to call the place home. And the tenant's job is to pay their rent and to take care of it. And when both sides do their job, it's fabulous. Sometimes, I'm sure you've all seen evidence of this or heard stories of this, if the landlord doesn't take care of a property, doesn't repair it, doesn't maintain it, and it starts to be shabby and unsafe. And those are sad situations because usually somebody then is living in a place that is not safe or is dirty or is cold, and that is not our business. We are here to take care of our properties, to provide a good, safe, clean place to live that someone's happy to call home. And the tenant, when they pay their rent and they take care of the place, then it's a wonderful relationship. So a lot of times we have opportunity to acquire a property because it hasn't been managed in the right way. Maybe there's some deferred maintenance or the repairs haven't been done correctly or at all. And so we normally have a chance to go in and do better and provide people a better place to live. And that's important to us because we know that not only is it the right thing to do, if we're the landlord, that's our job, but it also means better financial performance for the asset if people are happy to live there, because then you have less turnover. And if you have less turnover, then you have less expense to make a unit ready for the rental market. You have less vacancy or time empty because during the turnover, you have time where you have to work on it. And then you have time where you have to market it. And sometimes, depending on the rental market, it could take months to put a new tenant back in there. But if you keep the tenant in there because they're happy to call this place home and they don't want to move, then everybody wins. And so we work really hard to get our renewals as high as we can get them, because then we know we have happy tenants and then we know we keep our costs under control. So in conclusion, those are like some of the points that are most common that come up with LP, limited partner investors as they're investigating, should I do this deal or not? Should I get in a financial relationship with Ashley and his team or not? And we address these concerns all the time in our face-to-face meetings, our Zoom calls, things like that. If you've got other concerns or questions that you want to know about as it pertains to being an investor in a deal like this, send us a message. we'd be happy to set up a call, talk to you anytime, either face to face or over a video conference just like this.